When it comes to owning a home, let's face it, the cost of everything has increased, from homeowners insurance to interest rates to the price of home remodels, between labor, lumber, other materials that you use. Today, we're going to talk about how to self-finance home remodels, home repairs, and how to make your cash flow as efficient as possible in doing so. Hi, I'm Olivia Kirk.
I'm Tim Urich. We're from Tier 1 Capital, and we're here to show you how to regain control of your money. You know, there was a time recently where you could remodel your house, maybe a fixer-up project or, put a new deck on or a new bathroom or something. You could literally do it out of cash flow. Those days are over. Like you said earlier, the cost of lumber is up. The cost of, bathroom supplies, plywood. You can't even imagine what plywood costs these days.
You don't want to. And if you're going through a home remodel, then you know just how high it is.
And it's rare that a person could do a remodeling project out of cash flow. So the question becomes, how do you pay for these updates and remodeling projects that have to get done around the house?
It's not like you choose when you need a new roof, or God forbid there's water damage in your house. You need to make those repairs, and there's a certain amount of time you have to do that, right? So when there's a problem, it needs to be addressed, or else it will become a bigger, more expensive, more involved problem.
So the question becomes, how do we pay for these things? If we don't have access to credit, or we don't have access to capital, how do we get these projects done? And how do we pay for them if we can't pay for them out of cash flow?
Yeah, and a lot of times, especially with a new home purchase, you think, okay, I'm going to buy the house at a lower cost because there's these things that need to be done. And maybe I could ask the mortgage company, can I build a construction loan into this mortgage? And the reality of that is they're not the best terms to get the work done. You don't get the money to pay out the contractor until the work is completed. And so good luck getting a contractor to agree to that. And, the value of the house doesn't necessarily go up until the work is completed. So what do you do in the meantime? And the question becomes, okay, what are you going to do? Take a personal loan, or
credit cards?
Credit cards are so expensive right now, and credit card debt in America is at an all-time high. But if you have a life insurance policy that you've built up cash value in, you have the option to access that money for the home remodel. And I would argue that this is a pretty good way to do it, because interest rates are relatively low when it comes to life insurance policy. When you make the payments back to the policy, for example, I'm doing a home remodel, I'll take a policy loan, and as I pay that back on a monthly basis, I would amortize it just like I would do it if I went to a bank and, let's say, got a personal loan. And as I pay that money back, it's rebuilding the cash value in my pool of life insurance, right? So now I have access to that money when I want to make another purchase. And the third key here is that it's an unstructured policy loan, meaning I get to decide the amortization schedule. So because I like to keep my cash flow as consistent as possible, go figure, I'll amortize that loan to fit my budget, and I'll pay that money back just like I would pay back the loan at a bank. However, if cash flow becomes tight, I'm able to turn that off. If cash flow becomes flush, I'm able to make extra payments. And the key here is I'm not making extra payments to the bank where I don't have access to that money ever again. I'm making that money accessible by putting it back in my life insurance policy, where I have guaranteed liquidity, use, and control of that money with no questions asked.
So, really, you need to get a remodeling project done. What's the best way to pay for it, right? It's not what you buy, it's how you pay for it that is going to make the impact on your personal and your financial position. And that's why we advocate taking policy loans to do a remodeling. Why? Because again, you're in control of the process. You get to access the money, no questions asked. You get to pay it back on your timetable within your cash flow. however varied that cash flow is during the payback period. But again, that puts you in control. And that's the key. Control is the key.
Yeah, and I guess another thing I want to mention is the possibility of paying cash. If you have money saved up in your savings account that you want to tap into, that's also an option. But what happens when you drain down that savings tank is now you don't have the opportunity to earn interest on that money. You've given up control of the money, and now there's no opportunity to earn interest. Whereas when you're using a specially designed whole life insurance policy designed for cash value accumulation with a mutually owned life insurance company, the performance of that policy is going to be the exact same whether you take that policy loan or not. The only thing you have to take into account is the interest being charged on the loan. But the key difference here is we're able to see the amount of interest being charged on a policy loan, whereas with savings, when we drain it down, we see zero interest, right? But we'll never see the interest we don't earn on that money once we drain it down. And that is really a key distinction. There's a cost of financing no matter which way you turn it.
Yeah, you're either going to pay up or give up. Mm-hmm. However, if you're using the cash value in your life insurance, you don't give up anything. You do pay up, you're paying interest to the insurance company, but you don't give up earning interest on your money, and that is key.
Yeah, and ultimately, when I die, the life insurance death benefit is going to make up for all of the interest paid on all of my purchases throughout my life, and that'll be paid out to my named beneficiary at the time of my death. So it really makes for the most efficient way possible when it comes to financing. If you'd like to learn more about how you could put this process to work for your specific situation, be sure to visit our website at tier1capital.com. We'd be happy to speak to you about how you could implement the concept. If you like this video, be sure to check out these two. We picked them out special for you. Also, give us a thumbs up and hit that subscribe button.
Thanks so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.